nice putter you got here, Steven. Oh, hey, how you doing? Hey, I'm here with Stevan Davis. He's a great guy, I depend a lot on with my clients to help them get loans. And the reason why I'm here talking with him today is a lot of people that I work with have questions about their credit as it comes to their buying a property. They want to know how they can get more, how they can purchase more, and so credit has a big part of that, how much loan they can get. And so how to improve your credit score is what I'm asking Steven to help us with. And Steven, if you'll just tell us, what is a person can do to help improve their credit score?
Hi, there are 5 steps to making your credit score the very best it can be. Step number 1 is you need to know what your score is. So I suggest you go to annualcreditreport.com. That's annualcreditreport.com. Get a free copy of your credit report, then you'll know what you're dealing with. The next thing is you need to know that you're going to have a credit score from 3 different bureaus: TransUnion, Equifax, and Experian. They all compute your credit score a little bit differently, but they use similar formulas. So you need to know what your scores are. And they'll have reason codes. Those reason codes have to do with 5 other steps. Now, the 5 keys to your credit score are your payment history. Have you made all your payments on time? If not, have you been 30 days late or 60 days late, and so forth? That's your payment history. That amounts to about 35% of your credit score. The next 30% of your credit score is utilization. So here's what utilization means. If you have this much credit and you're only using this much and you're doing it really well, you're going to have a great credit score. But if you only have this much credit and you're using that much, well, you're using almost all the credit you have, and so your utilization is not very good. So utilization, 30% of your credit score. The length of time that you've had credit. So if you've only had credit for a couple of months, your score is not going to be very good. But if you've had credit, and especially good credit and a good performance record for a long period of time, that will help your credit score. The next is credit inquiries. If you've had a lot of recent inquiries, that may damage your score, and that could be 10% of your score. And the types of credit you have is another 10%. So you want to have mortgage and automobile and different types of credit cards, like a store card, a gas card, and so forth, and then utilize those different types of credit. So number 2 is understanding your score. Number 3 is the magic number. The magic credit score number is 720. When you achieve a 720 credit score, you can do just about anything you want to with your credit. You'll get a lower rate on automobiles and on insurance and on mortgages, so 720 is your key number. So how are you going to get to a 720 credit score? That's step number 4. How to get there. Use your revolving debt, pay your revolving debt down to 45%. Some people say 50, but the magic number really is 45%. So if you have a credit card with a $1,000 limit, then you want to have the balance running less than $450, so you stay below 45%. So pay off your different cards so you get to that level on your different credit cards that you might have. You should also use all your credit cards. So if you have 5 different credit sources and you're only using 1 or 2, that's actually hurting your credit. So it's utilization again. You know, you've got to be using all of those different credit cards, not to increase your debt, but just to use all your cards. So rotate them if you need to, but use all the cards and then pay them off at the end of each month. So it's about usage, not about how much debt that you have. Don't close accounts. If you've got cards, you don't really need them, don't close them. That will actually hurt your credit score. Instead, use that card. Go to the gas station, go to the grocery store, and then pay it off at the end of the month. So utilization will really help you there. The more credit you have and the less you use, the higher your score will be. You next need to evaluate any derogatory credit. If you've got lates, if you've got public records, anything that's negative on your report, then you need to make sure that those, if they're correct, well then they're correct. But if there's anything that's reported that's not correct, you need to attack those. Use the Fair Credit Reporting Practices Act and the Fair Credit Reporting Act to correct mistakes, get those mistakes deleted from your report, and recover from any public record damage. Public records are things like foreclosures, bankruptcies, and judgments, things like that. If there are mistakes on your credit because of those types of big events, then they can be taken off your credit report, and that will drastically improve your score. Finally, step number 5, if you don't know how to do all of that yourself, there are good books on the subject you can read, but if you don't want to do all that yourself, I suggest you get professional help. There are great companies, we could refer you to some, that do professional credit restoration with attorneys. It's not very expensive when you consider that you can be saving hundreds of dollars a month by achieving a 720 credit score. Good luck with your credit.